Hi, it's Alan Laubsch with Financial Network Analytics, and welcome to F&A Correlations. We're looking at the most unusual move of last week, which was the plunge in the Japanese yen on Friday. It dropped by 2.65 standard deviations and was the biggest cross-asset surprise, along with tech stocks that plunged by about 2 standard deviations. But the Japanese yen move was quite a lot more severe, so let's look at this. The Japanese yen has been one of the best performing currencies, but has struggled since the 11th of April. And we can see here this drop of 2.65 standard deviation was the biggest drop in well over a year for the Japanese yen. And this happens as there are apparently a record number of bullish wagers on the Japanese yen versus the dollar. So the question is whether this is a tipping point in the yen. More broadly, we can also see that the US dollar index overall had a significant up move, a 90% confidence up move, which is not good for markets broadly, given the negative correlation of the United States US dollar index with most markets. So we'll want to keep watching to see whether a strengthening dollar might hurt the rally. In terms of the Japanese yen, let's look at the key correlations there. We can see that the strongest correlations for the Japanese yen really are a negative correlation to financials. So the Japanese yen is a risk-off currency most closely connected to US financials, interestingly. The second biggest negative correlation is to the US dollar index. And then there's a positive correlation to the euro, gold, Swiss franc, safe havens, and positive correlation to bonds and the overall bond index, and of course a negative correlation to Japanese stocks being a safe haven. So let's see if this trend of the Japanese yen strengthening might actually reverse with this negative outlier, or whether we will see a continued resumption of the rally. Thanks for tuning in, and if you have any questions or ideas or themes, feel free to email me at alan@fna.fi.